Check, please.
Hey, welcome back to Everything Money. We've run a series of looking at stocks at their 52-week low. As value investors, we want to find good companies and find them cheap. Today, we're talking about three great companies: Stanley Black & Decker, Hasbro, the gaming company, and LGI Homes. We'll look at the financials, why these stocks have fallen to their 52-week lows, and our thoughts as value investors on whether we should be potentially getting in now or waiting even more. We'll use the stock analyzer tool to show you what we think you should be buying these at and what we'd be buying these at. You can also trade these with Mo. He'll show us the charts as usual on these three companies. Paul, let's get after it. You know I love one of these. Let's go.
Guys, my garage is filled.
Is it?
With Black & Decker tools.
I do DeWalt. Mo, you do DeWalt?
I'm just kidding. I have no tools.
Oh, okay.
I have Stanley, the yellow one.
My tools are all at Mo's house still. I sold Mo my house. And all my tools are at Mo's house. And, as Lisa asked me, she's like, what are you doing with those tools? I'm like, don't ask questions.
I use them.
Do you?
Yeah, I do a lot of projects.
Oh,
I'm a handy guy.
How about you pay me for them?
Can we get to the show, please?
Okay. So these are all companies that are at 52-week lows.
I love that.
So let's start with Black & Decker. Mm-hmm. Had a 52-week high of 225, 52-week low of 139, which is currently at. Guys, if I told you right here, May of last year, that this company was going to fall 45% or whatever the number is in the next year, what you just said to me, in the next 10 months.
No way.
No way, Paul. You're an idiot. You're so negative. Why do you suck? Well, there are many reasons why I suck.
Yes.
But this is not one of them, okay? Let's go look at the next one. Hasbro. Okay, so Seth loves Hasbro. Seth, tell us why.
Well, I've been an avid Magic the Gathering nerd collector and fan for 2 decades now, and they bought Magic the Gathering, at least bought the subsidiary company or whatever. So they own Magic, and a lot of people hate their guts, but keep going. They make toys, of course.
So here's the interesting thing. Their 52-week high and 52-week low are pretty close to each other, 105 and 85. Not far, but look at this. Look at this 10-year chart. I'm actually surprised they're not higher than their pre-COVID numbers. Do you find that interesting? Because you would have thought a company that makes things that you can do at home with all these kids staying home, that would have really skyrocketed. Guess I'm wrong. Mm-hmm. Final company, LGI Homes. Okay, home builders, guys. So here's what I'm going to say about home builders. They tend to have really, really good balance sheets and really good multiples. I don't know how I feel about that. So let's go look at their balance sheet. As an example, cash and cash equivalents, $2.2 billion. But of that $2.2 billion, 2.09 is inventory. Total liabilities, $956 million. So they're probably going to be okay from staying in business. Free cash flow. Let's look at their free cash flow here. Look at this, guys. The market's booming and their free cash flow has been negative for how long? 1, 2, 3, 4, 5, 6, 7, 8 years in a row. And they have very little capital expenditures. Look at this, 700,000, 400,000. Guys, my business upstairs spend this in 3 months on capital expenditures. Mm-hmm. This is a multi-billion-dollar corporation, and they spend it in an entire year. Why? What do they need to spend on? They're building the houses after they're sold. I always get, for some reason, I don't like the home builders. I just feel like it's a lot of fugazi, a lot of, I just feel like construction in general is very much how can I make money when times are hot? And then when times are bad, it's like, oh boy, here we go. Watch out. So these are things. So so to go back to Black & Decker, to me, Black & Decker is the one you want to focus on here. Because to me, this is a company, I don't think tools are going away anytime soon. I mean, how would technology, besides you saying you're going to do less projects if you have the metaverse, maybe, but people still have to take their Oculus off or the metaverse off to live.
And rest their eyes.
What was that?
And rest their eyes.
Rest their eyes. I think Black & Decker, great brand. Mm-hmm. People know it. People love it. Stanley, they're going to be around for a long time. This is one of those that I personally would keep on my list. So what would I do? I go to our stock analyzer tool. So first off, let's go to the 8 pillars. I'm going to focus here on Black & Decker. Not good on the 8 pillars here. Increasing their shares, high debt, cash flows down, price to free cash flows high. It's not good. Let me go look at their exact balance sheet. $8.5 billion in cash and cash equivalents, 16.6 in total liabilities. That doesn't bother me so much. I don't know. I look at this saying, let's see their income statement. Very little growth. Oh boy, 50% growth in 10 years. Let's see if they made acquisitions to make that growth happen. And they're making, maybe I'm avoiding this one too. I mean, look at all these acquisitions: 2 billion, 1.3, 600 million, 500 million, 2 billion. I mean, they're making big acquisitions, and that's probably driving their growth.
I think acquisitions are good. You're saying they're not.
Well, I'm not saying they're not good, but when you look at a growth rate, I don't believe in going to the stock analyzer tool. Look at the stock analyzer tool. The first thing here is revenue growth percentage. I believe in looking at it from an organic perspective, not from buying ourselves into growth. I want the company to be able to stand on its own and grow naturally without acquisitions. Acquisitions are cream on top. And the other thing is, CEOs tend to make acquisitions to look like they're busy, to make people, oh, look at this, we're doing this acquisition. There's a lot of synergies here. There's a lot of cost effects. It's like, okay, got it. They tend to do a terrible job with them. All right. So I'm looking at Black & Decker and thinking to myself, boy, whatever number I put in for this revenue growth rate, I'm going to be pretty close to like -2, 0, and 2. I want to understand what's their growth rate been for the businesses. This is going to take some research. Go to their income statement and say, okay, if all they had were the businesses that were here, what would they do in revenue this year if they just didn't include any other acquisitions along the way? That's probably something you have to call investor relations to find out, or talk to everybody in the AM community to figure that out. The whole point is, this whole process is a way of looking at companies and figuring out a way to ask more questions. It's not, oh, if there's all 8 pillars here, let me go buy it. No, because even on Black & Decker, I was like, oh, this is what I'm going to look at. And I'm like, you know what? I just don't like it. Off the dribble, I look at these things going, I don't like it. All right. Now, the reason we have this software is you can move on from that now and go look at another company that we haven't done a video on, because that was what was requested from our YouTube subscribers from us. How do we evaluate companies without waiting for you to make a video? So it was requested and we delivered. We made our own software. Everything you saw us do right here, all available in our software. 8 pillars, retirement calculator, 30 years of financial data, stock analyzer tool. You can put up to 50 companies in a portfolio and see how they look. Exclusive video content. Seth, Mo, and I make videos every single day exclusive to everybody on our software, which, by the way, also comes on our phone. Everything you see here is on our phone. Watch list. If you have a specific company that you want at a specific price, you could enter in the watch list. It'll notify you on your phone and email when it hits there. But the biggest thing we have, guys, and this alone is worth the price, is our EM community. Over 6,000 people in here, all talking about stocks, all talking about crypto, all talking about all types of investment, even real estate. You go in there, you look up Black & Decker, you can go to where people are talking about it. If nobody's talking about it, start a conversation in the general stocks chat about it. Have a conversation, because 6,000 minds are better than one, right? And if this can all increase your returns by 1 or 2% a year, or decrease your losses by 1 or 2% a year, it'll be worth hundreds of thousands, if not millions. And it's available for only $1 per day, less than a cup of coffee. $1 per day gets you all of this. 2 ways to sign up: everythingmoney.com or Patreon for international users. Sign up, $1 per day.
Mo, do you want to tell me if anyone's trading any of these companies?
So this is, call it Monday morning quarterback, but as long as you're following the rules, it's extremely obvious what you would have had here. And there's really no Monday morning quarterback after you make the entry. So when you get stocks that run down like this is where you can short. And you would have shorted this thing. Here's the rule. The rule is when your red line drops below the 80% line and you get an engulfing candlestick, there's a very clear engulfing candlestick right there. That's when you enter a short position. And then you let it go until your red line pops over yellow in the oversold area. That's where you take profits, and you completely exit your position when your red line pops over the 20% line. This was $198 when you would have entered. You would have taken profits at 172, and you would have ended up exiting somewhere in this area completely at about 180 or 187, whatever that is.
So the way that was going down, you worst case scenario made 5%, best case scenario made about 10%.
And there was nowhere in this entire run for 3 months, 4 months, that you would have needed to exit your position during that whole way down, because the red line didn't cross over yellow and do some type of sweet spot reversal. So this is why shorting is so important. You are going to see all of you're seeing it right now, the PayPals, the Squares, etc. When the stock market gets really bad, you're going to see a lot of big companies and you're going to want to short them. So if you want to learn how to short, come and join me in the Bid and Ask it's really as simple as I just pointed out. It's no more difficult than that.
Would you tickle my fancy with Hasbro, Paul? Just a smidge, maybe?
Oh, Hasbro. Let's go to Hasbro. Let's go to Seth's Hasbro.
Yes. Now, they make Nerf, Monopoly, Transformers. But, Paul, they're not just doing the toys. They make television programs. They're getting into movies. They have digital stuff. I mean, Magic the Gathering is a paper... It's a paper card game, but they opened up Magic Online. It makes billions of dollars having an online game. So I think maybe we're just starting some. The kids, Paul, nowadays, which I have arguments with my kids, is like, you and I had a Game Boy if we were lucky, but the kids can just jump off of one device and then keep playing when they get in the car, on the bus, at school. They're playing all damn day, and it's really my job as a parent to slow this down. But anyway, I think Hasbro has a bright future.
Yeah, well, they're selling for 27 times earnings and 17 times free cash flow right now, so it seems a little expensive. But I'm just putting in some low revenue numbers, 2%, 4%, 6%. I don't think 6 is realistic. They had a couple big acquisitions along the way. Profit margin, I put 6, 6.75, and 7.5. Look at these numbers. I hit the analyze button. The stock is currently at $85 a share. On the very highest of estimations, $90. But somewhere in the middle, $40 to $60. So probably around $50. And again, you can add the check mark here and start following it at 63.38 if you want. That's just the way I look at it. I just think it's expensive. I could have probably looked at that. I don't think the revenue growth numbers justify such a high premium on earnings.
That's our take on Black & Decker, Hasbro, and LGI. We'll keep you updated if they fall further into our sweet spot. And you're right, Mo. You're saying when it gets really bad out there, that our videos will be drastically different in terms of avoiding things. It'll be what are we not buying?
They're going to be calling us perma bulls.
Yeah, I guess so. Final thumbs up. Check out the card here. If you want to watch more about our 8-pillar process, you can see all 8 steps and the metrics we look at when looking at a stock. Quickly evaluate stocks. Don't waste your time. Evaluate companies quickly, and we'll help you do it. Final thumbs up. Subscribe. See you next video.